Hi, my name is Blaine Pacelli, and this is my March 2016 real estate report. The Labor Department reported that U.S. employers added 242,000 new jobs in February. This was far better than the 190,000 new jobs economists surveyed and predicted. It was also viewed as a very positive sign after a disappointing 172,000 jobs added in January. It was feared after the low January report that job growth could be stalling, but the February number of 242,000 net jobs put the 260,000 average job gains numbers back to over 200,000 per month. The national unemployment rate held steady at 4.9%, the lowest level since February 2008. Wage growth was disappointing, showing hourly wages up just 2.2% from last February. Wages were looking like they were beginning to rise over the last few months after being stagnant for years. So this was disappointing numbers. The Federal Reserve has a wage growth target of 3.5%. California unemployment rate drops to 5.7% in January. The Unemployment Development Department reported that California's unemployment rate slipped in January to 5.7%, down from 5.9% in December. Year over year, non-farm payrolls increased by 443,900 from last January when the state's unemployment rate was 6.8%. Stock markets rise for the third straight week. Stock rose again the week as rising oil prices bolstered energy stocks and the outlook of economists in oil-producing regions. Oil prices have risen 30% from their February lows. A strong jobs report showed that U.S. employers are still confident and expanding, which also helped stocks on last Friday when the report was released. The Dow Jones Industrial Average closed last week at 17,006.77, up from the previous week at 16,391.99. The S&P closed this last Friday at 1,999.99, up from the previous week at 1,948.05. And the NASDAQ closed this past Friday 4,717.02, and the previous week was 4,590.47. Bond yields have risen slightly since hitting historically low levels in mid-February. It's not unusual for bond yields to rise as stocks rise, as investors sell bonds to buy stocks. The 10-year U.S. Treasury bonds yields closed on Friday at 1.88% from 1.76% previous week. The 30-year U.S. Treasury bond yield closed Friday at 2.70%, up the previous week from 2.63%. The Freddie Mac primary mortgage survey showed that the average rates as of the end of February were as follows. The 30-year fixed average rate was 3.64%. The 15-year fixed rate was 2.94%, and the 5/1 ARM average was at 2.84%. We're seeing a lot of multiple offers right now, and there's still very low inventory. It has picked up somewhat, but still very low. It's about a 3-month inventory. On a normal market, it's about a 6 to 7-month inventory. A lot of the houses that are selling the most still are complete fixers or houses that are completely fixed up. If you have any questions, please don't hesitate to give me a call at 818-392-8550. Have a wonderful month, and I'll be talking to you soon.